is up, YouTube? Good morning, good afternoon, good evening from wherever you are in the world. My name is Oluwafemi Williams, and I welcome you to this new video. Now, I'll be explaining 2 or 3 of my trades on GBPJPY that I took in the past weeks, and I want to show you my thought process behind these trades and practically what I look at in the market before I take a trade. Well, I might hide some, I might keep some things because of it won't be unfair to those that are in my paid class. However, I will be showing you something that can help you to more than 50%, 60% and above, that can help you more than 60% in your trades and help you grow. Okay, so let's dive right in quickly. GBPJPY is one volatile pair, and we all know that any small move from GBPJPY could be resulting in some massive wins or some massive losses. And you don't want to actually take chances on pairs like this. So when I'm trying to trade GBPJPY, I take extra caution, and then I ensure that I'm using maximum proper risk management so that I don't get to blow my account. So let's just dive right in quickly. Okay, on the bigger scale, the market is on an uptrend, and actually just refuse to break below these lows right here. Refuse to break below those lows. So yes, I'm still looking at an uptrend here, although it has actually changed into a downtrend kind of, but these little downtrends can give you the money you want, and these little uptrends can actually give you the money you want. On the bigger time frame, we might just see a push to this point and then a fall back down to the monthly key level. Yeah, if you're not following me on Twitter, you can follow me on Twitter at Olu of Trades. Right here, Olu of Trades. You can check the description below. My Twitter handle will be there. My Instagram handle will be there. All Olu of Trades. You can check that out. And funny, my YouTube channel is the Williams FX. But notwithstanding, you can follow me at Olu of Trades and check out my pinned tweet for key levels. All right. So looking at this monthly key level right here, we might be coming back to retest the monthly key level either for a major bullish run or for more bearish movement, right? So, but that is not what I'm talking about here today. I want to talk about 2 or 3 of the trades I took in the past weeks and what I saw before I took those trades. Little trades, but good returns. So let's quickly jump right into it. So this is all there is to the 4-hour time frame, all right? And so let's scale down to the 1-hour time frame and see what we can see, because on the 4-hour time frame, that means you have to be a long-term trader, right? You have to be someone that trades hold trades for 2-3 days. To me, trading the 4-hour time frame, you have to be able to hold trades for 2-3 days. Like if you pick the trade from here and you were targeting here as your profit, you would have picked this trade from here and then you would have hit here after 20 days. After 20 days. Personally, I won't hold the trade for 20 days. Yes, it gives you over 1,000 pips, but it is still a very long time to hold a trade. For some of us that like doing our day trades, get in and jump out just like that. Okay, so let's scale down to the 1-hour time frame and have a look at what I saw. Okay, so when the market hit this 50% level, fib level, now some of you will be wondering, how did I get this fib level? It's one question that a lot of people ask me. So how do you get these fib levels that you draw? Most times when I do my daily or weekly analysis, now look at this push to the upside and rejection. If you draw your fib from the bottom here to the top here, yes, to the top there, right there, right there. Let me adjust this very well. Is it here? It's from this line, I guess. No, it's from here or from here. Aha. Right from here, 61.8 fib level. I don't think I drew it on the daily time frame. Hold on. I think I did it on the weekly or monthly time frame. I think that's where I got my clarity from. Okay. Oh, I did it to this point right before it hit this top. I marked out my 61.8 here. If you draw your fibs on the weekly time frame, you get these things easily. So let me see here. Oh, this is it. This is it. from this key level here to the top, I got my 61.8 fib level, and that is where I have my 61.8 right there. Okay, that's one. That 50% is imbalance. It's not fib level, it's imbalance. It's the imbalance. It's the imbalance in between the spots. Yes, the imbalance in between the spots. Exactly, 50% imbalance level. That's it right there. Either 50% imbalance level, and also the 50% in between these zones could be also seen. But the market gave me my good rejection at that 50% imbalance level, which I prefer. And then the 71.8 was the inverse on the monthly. I think it was the monthly I drew it on. It's been a very long time, so I can't really remember. I can't really remember where I drew that, how I got that one. Full fib. I can't remember I got the 78.6. It's been a while, a very long time I drew that. But these are markups that I do on my charts. And if you watch other of my other videos that I did, you would see some other markups that I drew. Like right here, there's a markup of weekly fib trick. You can see W fib trick minus 27. So I drew this on the weekly time frame. Weekly time frame. Right here, I got this fib trick level, and the market would actually be selling down to this point and reject off this line. So I'm waiting for the sales to happen, which we've seen signals for sale already. So when the sales happen, we should be targeting this place for our take profit, this very line that is around 146,500. 146,500. Once the sales of GJ starts happening, we should sell to 146,500. Right? So let's go back to the 1 hour time frame. I've given you an insight to how I do my markups, right? Even though I've forgotten how I even got those lines. However, we can see that the market did its bid at rejecting off that level. Broke, came in, we touched that level, we tested that level and moved. So it's a very valid level. Can't remember how I even got that line. Anyways, so we're on the 1 hour time frame. I caught a buy here, I caught a sell here, and I caught another sell here. So I'm just going to explain how I did that. So I saw this buy, this movement to the upside, giving me the upward movement, retest, the rally, the base, the rally, the base, double top right here, and then it broke above, rejected, double, gave me that top movement. So yeah, when I saw that happening, I was like, okay, the market is definitely coming into this institutional candle at the top right here. Obviously, we can see this institutional candle right here, this very hot candle before the down candle. So I was looking forward to catching a trade that would hit this bottom before it starts falling, which the market actually did. So after marking this one, I actually didn't mark all these ones because I will do a video on other blocks, a very good video on other blocks. But if you watch my channel, you will see it somewhere because I will be doing it anytime before, after this video, but it might be uploaded before this video or uploaded after this video. Okay, so there is no serious institutional candle right here because of the cover-ups that we are seeing, no imbalance. However, the market created a very good institutional candle here and moved the money from year to year and to year. We call it money transfer in Forex. One of my videos will actually be explaining money transfer in a way that a layman can understand it, okay? So when the market gave me this push to the upside, I knew I had to start looking for buys to this line right here, to that line right there. So what did I do? I started scaling down to the 15 minutes time frame. That is where I actually look for my other blocks and more confirmation before I scale down to the smaller time frames to pick my trade. So I scaled down to the 15 minutes time frame to look for an entry. Okay, so I scaled down to 15 minutes time to look for an entry. It pushed up, the market pushed up right here, gave me that base again, filling up all the imbalances that I really wanted it to fill up, moved in here and didn't break below these lows. So that was my confirmation, right? Didn't break below these lows right here. It didn't break below these lows. Naturally, would have been expecting something like a rally, a base, and since it didn't break, it should break these lows and then give us a confirmation for a sell, right? As it has broken these lows, we should be waiting for a confirmation to retrace and then sell, right? And then break the final lows. However, the market refused to break these lows right here. It gave us a push up, push down, push up. It didn't break the highs, and then it didn't break the lows as well, and gave us a pin bound 15 minutes time frame. So I knew that at this point we should be looking for buys without any issue. We should be looking for buys in this market. So now at this point, after this rejection, this is another institutional candle right here. The market came into the institutional candle, went up, didn't break the highs, came back into the institutional candle to mitigate it twice, and then we had multiple rejections. So this was my clue. As it gave me multiple rejections right here, I scaled down. As it gave me these multiple rejections, this very one we are seeing right here, all these rejections. That means the sellers are not active in the market. The buyers are pushing the price, and they want to push the price at least to this point before the sellers come into the market, right? So the buyers gave us these rejections, and then I went down to smaller time. So let's start together on the 5 minutes. Let's actually run it up together, right? So let's run it together. So right here, this is our rejection, giving us a very clear move on a demand zone here, okay? Giving us a clear move on a demand zone here. And then I saw that the market had pushed up and given us a break of structure. So finally, the market breaks above these highs with just a wick on the 5 minute time frame. Breaks above that high. Now, analyzing the market comes with practice and practice. At a point, you start seeing these things clearly. If you notice, the market didn't break this high here, but finally comes to break it at this point. Right there, breaks it. It just kept moving around in a range around this point, kept moving around in a range. So I was waiting for the market to break that high before I now look for my entry. So when the market eventually broke those highs, I knew we had to buy into this market, okay? So the market broke those highs, gave us our liquidity, which is the criteria for me to look for my trades. Gave us liquidity right here, gave us liquidity right here, gave us liquidity that almost equal lows there. Actually, we have equal lows here, but I'll pick this one, almost equal lows. So the market needed to take out those equal lows. There will be another video talking more about liquidity. So the market cleared out those equal lows, and this is my area now. I'm looking at taking the trade from this area. So I scale down. There is no serious order block here. Naturally, I should have waited, okay? Naturally, I should have waited because my order blocks, I take them on 15 minutes time frame. But looking at the bottom, there was no order block here, no order block here, no order block here. And the little institutional candle should have been here. If that caused this break, had been mitigated severally with all of these rejections. So this whole area is an area to be looking at. Right here, this whole area here is an area to be looking at. So naturally, if you want to take this trade, you should have just put your entry at the top of these rejections here and put your stop loss at the bottom of rejection. That's about 25 pips, and nobody wants to do that, right? This is GBPJPY. So I scaled down to actually look for good entries for the trade. So here we go. Now you're going to see my buyers first hand. Okay, I think this thing moved. I think it moved. So this is a 3 minute time frame, and I just knew as I saw this rejection here, this very one, this institutional candle rejected but downwards and then pushed to the upside. I knew this was it right here. I think I actually took the trade off the body of this candle. I took it off the body because of the long wick above, right? I took it off the body because of the long wick above, and then I took my trade. My entry was at the 50% of my gun box. I will also be talking about this, but please put it in the comment section, and I will definitely be sharing my thoughts more on this, all right? On gun box, whatever topic you want me to talk about, I'm going to talk about it. So I put my entry on the 50% level of the gun box, and then my stop loss was about 10 pips. It was just about 10 pips. Yeah, I made it 10 pips because I will give allowance for rejection. Since we've had several rejections here, the market could just give us another rejection. So I give it allowance for rejection, and here we are. The market gave us that easy run to 50 pips. 50 pips right there. Market gave us an easy run to 50 pips, and that was the trade, guys. That was the trade. Not as easy as you would have seen, but these are trades that need a little bit of calculation, and sometimes we lose out on some trades because in some other videos I will be definitely just be talking about, the losses I have made. All right, but for now, let's just talk about some wins. Okay, and with this, if you used 0.1, you'll be risking $10 to actually make $50 on your account, which is a very good one if you were trading a $100 account. Okay. So what if you scale down to the 1 minute time frame? I always like looking at that option. Looking at an option where what if you did something different? Would you have gotten a different result? That is why I'm scaling down at this point to the 1 minute time frame. Oh, I definitely took this trade of the 1 minute time frame there. Yes, I took this trade of the 1 minute time frame. Oh yes, I took this trade of the 1 minute time frame. That's it. I took this trade off the 1 minute time frame. Oh yes. It was that break of structure, created the other block right there. Oh yes, I took the trade of the 1 minute time frame and it came into it right there. Oh, I remember I had two options and then I used this option. And there we have it. Okay, so let's go back to 15 minutes time frame and look at what the market did afterwards. Okay, so the market hit that point as predicted and then gave us that break below, gave us that equal lows here, right here. Didn't break below any structure, just gave us that equal lows. And then pushed back up to this little supply zone here. So if I had seen it, I would have taken the sales from here, but you can't be so sure. It didn't break any lows, so I shouldn't be taking any sales from this point. So I waited for the market to actually give us a break below, okay? And so the market gave us a break below around here. Just around this point. That was our break of structure. Right here, the market broke below this week, this very week here. Give us, how did I know it broke below that week? We have our up, base, up, base, up, base, up, right? The first base breaks like that, came into this zone. If you want to take the trade, which I've taken from here, and then comes again, breaks this low a little bit, moves up, and then breaks this low. So we have 3 breaks, 1, 2, 3, and then this final one breaks. Okay, so as soon as it breaks these lows, which automatically also breaks this low below here, now we have multiple break of structures, and that is one very important criteria to entering some of the trades that we enter. And most of the time, it might just be weak rejection, like we have right here, just a weak rejection, but that is a break of structure. If you are on smaller time frames, it's a whole candle right there. It's a whole candle. Okay, so as soon as I saw that, I marked up 2 areas in my markup. Now, this is a little bit controversial because a lot of people say, how did you know? How didn't you know? Let me clean up the charts a little bit, okay? Okay, so we had multiple break of structures, so I could put my bet on sales now because the market would not be buying if they're not breaking those structures on 15 minutes time frame, which to me, as a day trader, a decision, 15 minutes time frame is decision time frame as a day trader. All right. So I see the market break below this point, and then it has created an order block here, an imbalance in between that point. So I mark up that imbalance. I mark up the imbalance 1, just like that. I mark up the imbalance, and then I mark up the OB. The institutional candle with the up candle before the down candle right there. So I mark up the OB, and then I talk to myself. Now this OB right here has very big weak rejections that I don't like. Okay. Now this candle engulfed this body engulfed this body, but I don't like the weak rejections. So if I don't take the trade, I would have likely put my entry on the body of the candle. But right here on the 15 minutes time frame, I thought to myself, okay, let me take this bet. So right from here, I picked the trade, and then I put my stop loss just above the body there, about 15 pips above the body. Yeah, right there, just above the body. And then that was it. Now, how did I mark that imbalance is what I'm going to be explaining to you right now. So the space in between this week and the new week that came, and this, yes, the space between this week and this lower week here, yeah, that's the space, this lower week here, this up candle is what I looked at, okay? Now let's scale down to the smaller time frames, 5 minutes time frame. Okay. Okay, this is it. So let's get down to the 5 minutes time frame. So the market gave us this demand zone here, supply zone at the top there, and then created that imbalance there. So I picked that, I marked that point. This is an imbalance. Then I reduced it. This is 5 minutes time frame. I reduced it. Okay, so we have the imbalance, very tiny imbalance there. The market had two options: pick off the imbalance or pick off this point, because I had noticed the way the market was rejecting. I knew that it was going for a massive move, right? So at this point, I just picked my entry from here, the lower point of the imbalance. What if the market comes into this place? Then that would be it. I will lose this trade. And I knew it was going to be massive, right? So I just put it like that, and 15 pips in. We are 15 pips in the trade, just 15 pips stop loss. And then my TP level was right below this point, right below this point. Let's go back to, okay, right below this point. This was my TP, just at the top here. Let me show you why. You see this small candle before the up movement? That's where I wanted to put my TP, right there. Right there. As you can see, the market went right into it, went right into that line and then rejected from there immediately. So that was the trade. It was a very sweet, over 200 pips. Yeah, over 200 pips. Very sweet trade. I took 84 pips. 80% of the trade at 84 pips. 80% of the trade was closed at 84 pips, or 70% of the trade, and the rest were held till it hit take profit right down there. And that was my reason behind this trade. Quite controversial. The entry was aggressive, but it was worth it. And then the final trade on GU, we expect the market to still sell below this point. And then the final trade on GU wasn't so much of a big deal. It was a trade that did well a little bit, but didn't do well as much as we planned. So the market does this, hits this point, moves up, comes back to create these lows. So let's go back to 15 minutes time frame and round up this video quickly. The market comes, create these lows, and then moves up and breaks this structure above. And then we might say, okay, we are looking for buys. So yes, this point might be marked for OB. Say we are waiting for the market to come into this place, but it didn't give me the criteria I want, right? I have criteria, no imbalances, no liquidity. So I didn't mark that point anymore, right? So the market is giving me that feeling around here. We might come back here to test this point, okay? During market open during the week, you might come back here to test this point, but that's not the real point here. The real point is, how did I catch the new sales? Why did I catch those new sales? So the market gives me this movement to the upside like this, rejects up, and then rallies in between this point, like that, breaks above, doesn't break below, doesn't break above again, and then breaks below massively, giving us a very good break of structure right here. Okay? Break of structure lows right there, giving us a very good break of structure right there. So the break of structure is so evident that I knew that at this point the market would come into this region. I think I marked this candle. I don't even know why I marked that candle anymore, but I was looking at this whole area for the market to take the trade off of. So I think I scaled down at this point. I marked this whole area, and then I started scaling down. All right, I started scaling down. I think I marked this whole area. Yes, this whole area, this whole retracement. And the market came right into the 50% of the whole retracement, right? So I started scaling down. After scaling, right there, there is no serious order block. Moved in, took money from here, came back, took money from here, came back, took money from here, came back, and arranged this spot here. So this is the only spot to me that the market had not taken money from. Right here, took money from here, came down, this candle brought in a wick to take money, and then created this doji right there, and that was my entry. The doji was my entry right there. The doji was my entry. I think I was targeting only about 50 pips of this trade. Can't remember if I even caught the 50 pips. Can't remember, but I didn't wait till TP for it to hit TP. I just took the profit and left the market. All right, so this doji was my entry right there, because the market had not come back into that doji. So I just put my entry here, put my stop loss above these highs right there. I think I did about 7. I think I did 8 pips. It was 8 pips I did. So I think I took the market off this middle and did 8 pips above. Yeah, this is what I did. I took the market off the 50% of that zone and did 8 pips above with about 0.5 lot size. Yeah, so I reached 40. And then I took 50% off. I took 50% of this trade just here, somewhere around here was where I took my profit here, just around this point was where I took my profit. However, this was my thought process for this trade. I hope you guys have been able to learn 1 or 2 things from the way I take these trades and all that. And the way I take these trades and all that. Oh yes, this was it, 50% here. I know I always scale down. I know I always scale down to like the barest minimum. Let me check the 1 minute time frame as well to ensure that I scale down well. Oh, there was no OB here. So I scaled down to 3 minutes. I found the OB on 3 minutes, and that was where the trade was executed. Yes, that's the OB there. That's the OB there. And the trade was executed right there. Easy peasy, right there. Right there. 7 pips, I remember now. 7 pips. Right there. And then I got 50 down below. 50, I took my TP at 50. Just around this point, yes, just around this point. And the market went right in and executed that trade for me quickly. So thank you guys for being around. My name is Olafemi Williams. If you have not subscribed, do subscribe. We are putting in work to ensure that you guys learn a lot, and ensure you drop a comment below on what you want me to talk about next. And then you turn on the notification button. Like I always say, let candlesticks and price action always be the judge. I'll see you guys in my next video. Until then, bye.